Hello, trading is closed on September 12, 2019. Let's go over our calls. Look for the pattern with the early low. We got that. We said the pattern usually has early low rallies into the close with a high at the close, something like yesterday's pattern. I said based on someone else's work that wouldn't happen, and so I guess he knew what he was talking about. We have some targets we get to cross off the list. We said to be alert for my page 120 sell signal. The signal says there should be a move down of 8 to 10 points. If you look from this high, we dropped 8 points to this close, give or take a few cents. This is 10 points, give or take a few cents, and that's 9 points, give or take a few cents. You don't have to rub your nose in it that many times, but it certainly worked. Kind of amazing how targets from over a month ago generate a signal like that, but it does work. We had this huge rally here. In addition to the sell signal, MEJT gave an optional target that we'd undercut this low, and we did. This is the reference bar from the morning pattern. If you're going to have a trending move, you really have to have a 5-minute bar close outside of this reference bar. That never happened after it printed, either to the upside or the downside, meaning trending attempts never really got started. MEJT said this drop was false, the rally was false, and the drop was false, and they've all played out. Tomorrow's pattern has the early low, and it's not good that this pattern not only couldn't close near its high, but couldn't even close over any of these highs. Couldn't close over any of the highs. Unless we gap and take this high out promptly, lower prices should print. This number remains on the table until early tomorrow. Now, because we gapped up, it might not print, and I'm not predicting it. But that's the preferred time frame. And if we do see it, it has pretty ominous implications. Well, here's what we said. Said it tends to be positive. It wasn't. We had the dichotomy, which I think I've worked out about the breadth and the market leaders. We'll talk about that in just a minute. I talked about the page 120 sell signal. The big problem with this market here isn't just the failure to overtake these highs, which is a short-term problem for tomorrow. It's really breadth. Now, the breadth's been improving, but you'll see that even though the market is near its all-time high, the number of stocks propelling it there continues to be fewer in number, which means breadth is weakening. And the real cause for concern is it's the market leaders, which are the ones giving up the ghost. Enphase Energy was a powerful stock. It just kept going up no matter what. In about a month's time, it's dropped from 35.42 to 21.23. I mean, that's a 40% drop on a market leader. That's not good. And what really isn't good is as it's dropping, the volume is going up, meaning people are getting out. Lululemon has been going straight up too. It had a great breakout pattern, broke out, high volume over this whole thing, a low volume pullback, just what you want. It's a perfect setup for the rally to continue. We're going up, but the volume is dropping off. People just aren't going into growth stocks. Instead, stocks like telephone and big volume have been going up. And the implication is that the number of stocks propelling the market higher is falling in number, and the stocks people are going on the stocks people are going into aren't the market leaders. They're conservative issues being purchased mainly as cash substitutes and safe havens. That's not good. Now, I've been looking for this trend line to hold. Maybe it will, but I'm not so certain any longer because today's action is pretty negative. We still have to get follow through for confirmation. I'm not certain that's the end of wave 2. I do think we'll have to come back to this blue line at some point. I found this impossible to count until today. I still don't think it's a clear count, but if that's A and that's B and we stop right here, I can make things work. And I can make things work right where there's a Gann fan trend line. And the more important trend line going through here, through the highs of the consolidation, right over here, bouncing off of this gap. You just draw this through here, right there. That's a powerful trend line. If it holds, that's the end of the rally. So here's what I came up with. I don't think it's particularly pretty, and it might not be right, but I think this is a 3-wave structure. I think there's a clear overlap. This overlaps. If you can't count this as a 5, and I sure can't, then we're not in the wave 3 rally phase up. And if it's a 3, I can make it count for this being over at today's high. So tomorrow's going to be critical. Pattern, I should have said early low. That's my fault. I'll change it. Thought I proofread this, but obviously I didn't. Pattern has the early low. We could gap up first. My bad. This is reinforcement. Could gap up first. The failure of the pattern to close near its high or even to clear prior highs is negative. Unless we gap and overtake today's high, lower prices should print. We have resistance from a Gann fan and trend line in the wave count. It's a 3-wave rally. Breadth's not confirming. Growth stocks are tanking. Conservative issues are holding the averages up. NASDAQ McClellan oscillator has touched its upper Bollinger Band and then started to break down. It's negative if we get follow through. All hope is not lost yet, but the bulls need to overtake today's high promptly because today's a candidate for the end of this rally leg. And all we need for confirmation is to undercut prior lows. And all we need to kill the idea is to gap up and take these out early. But for right now, I think this is a pretty negative pattern. And if we do get confirmation, I think that this leg of the rally is over, and that's today's call.